Good morning all, CamelbackTrading.org coming to you this Wednesday morning, August 9th. We are looking at Window Trader's market profile of the ESNENQ. So, after a very strong rally late in the day to go out with a price spike and a price probe, the market is probing higher again as we're possibly looking to gap higher. Once again, it's the year of the gap here in the S&P. Unfortunately, these gaps have not held. We've had 40 upside gaps, 30 downside gaps. That's 70 gaps out of 150 trading days. That's amazing. This could be our 71st gap of the year. 10 out of 40 or 25% of upside gaps have held this year. The main thing the bulls are trying to do is put the daily back into balance. So it's CPI looming before us tomorrow morning. The goal right now looks like for the bulls is to at least put us into balance. Remember, the balance high initially was Wednesday. Okay, but since we went down on the daily yesterday, today we'll just be forming the balance. So just because we get to Wednesday, if we were to get to Wednesday's high, doesn't mean that's the balance high. Whatever today's high, if we went above that, would be the balance going into tomorrow. But first things first, we have to see if the gap's going to hold. Do we take out Friday's high, and then what happens at Wednesday's high? As far as righty goes, remember, they went out with a double distribution day yesterday. They're looking to gap higher. Their overnight high is near their wide POC from the other day. Remember, those were downside destinations. They became upside destinations. NQ, again, pre-market got to it, and so did we in ES and SPY. It doesn't count unless we get it in regular trading. So, again, just like we said last night, the most important thing this morning for bulls is to open either in the price spike or above it. Well, right now it looks like they're trying to open above it, okay? So that would be positive. They'd have the gap to lean on, they'd have the price probe to lean on, they'd have the price spike to lean on, which is A's high, okay? If they start failing, listen, any failure up here and any acceptance below A's high from yesterday, remember, there was absolutely nothing inside of yesterday's range. So just keep that in mind if they are to fail. And the reason I keep bringing that up is because how fickle these short-term traders are. Right? There's no allegiance to following through. So if there's something they don't like, they would give it up. That's what makes this job a lot trickier these days. You know, and before high frequency day trading, algorithms, you dealt 99% of the time with long-term money. Now it's the other way around for the most part. So as far as a game plan for this morning, well, first off, again, I think this would be a good risk-reward short against the overnight high and Friday's high. Okay, that's not a lot of heat, so that's a short play. As far as a long play, doesn't look like I would want to long the gap because these gaps don't really hold. So what I would do is probably long between the gap fill and the price probe, and then see if we hold the overnight low. That would be an early game plan this morning. And chart-wise, so here's the daily. If we take out yesterday's high, we'll be putting ourselves into the start of a 6-day balance, right? Wednesday's high for now would be the high of it. Yesterday's low would be the low of it. And the reason I'm saying that is if we were to somehow take out Wednesday's high, then today's high would be the high of it, okay? So keep that in mind. The 20-day moving average closed at 452.18, so it's still $2.50 above us. I have a feeling we're going to be in a nice 6-day balance heading into CPI tomorrow. Good luck trading today. Thanks for the likes and subscribing to this YouTube channel. And we'll recap.